It's going to be a scheme of arrangement, and obviously needs to be seeing the media assets of SBH form into a company limited by a guarantee. But I think when you look at the three parties involved, I guess the investors are receiving just under $2.10 per share, and that's going to be made up of, I think, $668 in cash, $715. Okay, assume they've got 1,000 shares. Sorry, they're going to be receiving $668 in cash, $715 in Keppel REIT units, as well as $716 in SPH REIT units. Now, Keppel REIT and SPH REIT themselves, they've been listed for quite some time. Keppel REIT's been listed since 2006, generated annualised total returns of 6% to date. And then you've got SPH REIT, which was listed in 2013, and that's generated something like 5% annualised total returns to date. They're also receiving, I guess, a price of just, as I said, just under $2.10 per share. Now, prior to that announcement yesterday, the shares were trading at $1.88, so that's a 12% premium. And it's also a 30% premium to the VWAP price of SBH, which has also been one of our strongest stocks on the exchange this year, gaining more than 60%. Now, for Keppel REIT and for SBH REIT, they're reading in that announcement, Keppel said it was supportive of strategic arrangements between Keppel REIT as well as SBH REIT to look at a stronger integrated platform. Now, if those two REITs were to somehow merge, let's say, you would see their combined market capitalisation grow to around 6.9 billion Singapore dollars. And that would place it just under the top 20 stocks of our all-share index, making it possible contender for the STI.
But how good a deal is this one for Keppel shareholders, essentially, Geoff, given that you're actually bringing on board SPH's property portfolio, which then gets integrated with the Keppel REIT?
That's right. That's right. I mean, well, last year, Keppel came out with its 2030 vision, and there's four main pillars for that. There's energy and environment, there's urban development, there's connectivity, and there's asset management. And most of those assets of SPH ex the media, they do fit into three of those four pillars, with the exception of energy and environment. So in terms of the connectivity, you'll have M1, which Keppel already has a stake in, and you'll also have the data centres to help build that data connectivity portfolio under Keppel's 2030 vision. For asset management, you're also going to have these purpose-built student accommodation assets, as well as the aged living assets, as well as the REITs, and that will give income as well as some secular growth, if you will, when you look at the PBSA and the early living assets. And then, of course, you've also got the urban development, and you've got the Woodley developments, as well as the Seletar Mall, which will come under that urban development. But most of the impact for the Keppel shareholders will be through the asset management pillar that Keppel is trying to build out. And, of course, there's a number of other assets associated with SBH that Keppel will look to monetize in the years ahead, if this obviously goes through in time.